Hi everyone. Today we're going to talk a little bit about the reconciliation. What does reconciliation mean? It means bringing things together. Here's the official dictionary reference. It's number 2, the action of making one view or belief compatible with another. You're familiar with the checkbook register, which you learned in your previous lesson. So now we're going to talk about how do we reconcile that? And what do we reconcile it against? Well, the bank's going to have their records, you're going to have your records, and they really do need to match. So we're going to look at the monthly bank statement. Every monthly bank statement lists all the monetary transactions and balances for a specific period of time. It's usually about a month. Okay, it includes the dates, the identification for each transaction, what type it was, when was it, what was the amount, what were the withdrawals, which are your checks and your ATM debit purchases, what were your deposits, was there any interest, are there any fees that you need to pay? Okay, each transaction, excuse me, and current balance lists all the deposits, the checks, the debit card transactions, your ATM transactions, and any additional fees that you may have incurred. So what do you need to do? Well, you need to balance your checkbook register each month so that it matches the balance shown on the statement. You do this every month to make sure that you have the right balance and you don't bounce any checks. Because if you bounce checks, it will cost you more money. So this is a view of a monthly bank statement. You're going to see it's from Guardian Angel Banking. It's for Sally Smith, and it lists her balances, her deposits, her withdrawals, and each individual transaction, both by a number, a date, and the amount. So we're going to look at this compared to our bank statement and our check register to see if they match. So on the left here, you see your bank statement. On the right, you see your check register. Okay, what you're going to do is lay these out in front of you, and you're going to check off what's the same. You'll notice there's a red check mark on the top of your check register for deposit 14401, and you're going to see on your bank statement that that's the first transaction that's listed under deposits and other credits. You're going to do this for every transaction that you see on your bank statement. So this is what you will eventually end up with. You see the check marks there? We're going to check mark everything that shows on our bank statement. You're going to notice there are two that do not have any check marks. So there's all the ones that have been cleared by the bank. Okay, so now we're going to look at the bank statement and make sure all the balances are okay. And we're going to fill out now the reconciliation. We did have an outstanding deposit of $30, so we're going to list that. We're going to take that $30 and add it to our bank statement balance, which gives us a balance of $121.41. Then we're going to subtract any outstanding withdrawals. So we had $46.47 of withdrawals that we recorded that the bank was not aware of yet. So we have to subtract those, and that gives us a balance of $74.94. That is the balance that should be in your checkbook. Once they match, you have reconciled your bank statement and now can go on to the next month. You want to compare those totals with the checkbook register. If they do not match, you probably made a math mistake, so go back and check your math and make sure you didn't miss any service fees or bank charges that were on the bank statement and not in your check register. That's the end of the bank reconciliation lesson, so to speak. So if you have any questions, make sure you write them down and bring them to class tomorrow. Have a good night.